What up, what up, what up, what up, what up, YouTube? Welcome back to another episode. This is the Market Watch. We're gonna go through kind of how I like really manage some of my trades in these episodes. So really kind of give you guys an inside look at like how I'm managing my trades, what I'm looking at, what makes me kind of put my stop loss up or stuff like that, all that intricate stuff. So if you think you're gonna get some value from this, hit that like button, hit that sub button, and that bell icon to make sure you get notified every time we drop a video. Okay, let's get into it. So we got sorry, tongue tie. We got Euro USD up on the screen as you can see. I actually we're gonna talk about the dollar, but we're gonna start off talking about Euro USD. I usually start off talking about the dollar first, but I want to focus kind of heavily on the divergence that we saw building up to now, the trades that we took after seeing it build up, and then how we're managing this whole setup from here moving forward. All right, so we have, as you can see, marked on the bottom, we have price going higher. Price, the strength of this asset is going higher versus the rest of the market. That's what the RSI is telling us down here, while at the same time it was going down in price, in actual real time, right? So we know that that is a discrepancy in the markets that tells us that things are probably going to need to reprice in a different consolidation area to balance out with the rest of the market. If it's going down in price but it's getting stronger versus everything else, then it's probably undervalued, and vice versa. If it's going up in price but it's going down versus the rest of the market, then it's probably overvalued. You know what I'm saying? So let's look at how we actually got into it. A lot of these boxes are kind of more like day trading level areas that I had marked, just kind of like for reference. I'm gonna clear some of this off though, so we can kind of talk about it without so much going on right there. So okay, one of the ways that I do like to trade is I like to use equilibriums as like mediaries and key levels for price, because they turned out to be pretty cool. Like if you look at the distance between here, there's an equilibrium right around here where price stopped a bunch of times. That's why I have this box here. And then when price kind of seemed like it has two separate consolidations within one consolidation, I'll give it another equilibrium just to kind of keep track of it, and that's what this line is here. And I like to do that just to kind of, like I said, keep track of price, make sure I understand where I am in the market, and that's heavily what goes into precision trading, is really understanding where you are in the market, so you can really trade on either side just depending on your timing, because market's always going up and down. You know what I'm saying? So precision trading is definitely the most well-rounded strategy I think is out there. But I mean, if you trade smart money concepts or support and resistance, you can probably still make some money. But I don't like to miss any factors that go into the trading. So having a strategy that's just well-rounded, a lot of checks and balances. I follow my rules. It keeps the win rate high. You know what I'm saying? It keeps the win rate high, and it keeps me in the loop and in the know about what's going on. So we took an initial trade on this pullback here, right? I did take an initial buy. I took profit like right around here. I think after we dipped and did that, I took profit, because I'm like, okay, yeah, that's like choppy price action. Plus, it's like even with divergence building up for this long, it's not just gonna swing and just go to the opposite side just like that. It wasn't just gonna keep going. It's gonna consolidate down here, truly give the market time to balance out, and then start repricing higher. That's usually how catching a change in trend off of divergence works. All right, so wait for it, and we started seeing that AUD USD was looking really good as far as like what we were seeing, looking for buys after some selling and whatnot. So that correlated into this a little bit as well. So like when you have markets that are trading together, and like one market might just be in a better position quicker, and it will give you insight to other markets that you could be potentially trading. Like if you're buying Bitcoin right now, then it stands to reason you should be buying Ethereum in a couple of hours or maybe the next day. Granted, you don't have to buy Ethereum just because you're buying Bitcoin, but if you want to trade correlating things, that's something like it would go. You know what I'm saying? Excuse me. So, in actually getting into the second position, I wanted to get in when price dipped down here, but I really wanted another touch of this box, so I didn't take the trade. So I actually got in on this pullback, I believe it was. Yeah, we got in around this pullback, and we're still in the trade right now. So we're basically waiting for momentum to start pushing towards the upside, and it's really the same exact looking setup on AUD USD as it is on Euro. It's just the setup for AUD is slightly tied to gold, right? So we're just hoping gold's gonna fly like we think it is. Like we're pretty confident. We can go pull up the chart so you can see what I see. Oh shit! I didn't realize I typed XUA. Yeah. So we'll need to we'll reasonably on the 30-minute we have divergence built up, all right? So we're gonna need to see some repricing. Well, it was kind of building, but now it's just kind of like flatlining. And see, when I see something like that, like it's not diverging, but it's not like completely on point, then we'll probably see something like not a change of trend, but something like a repricing for us to go higher. And that's why I wanted to pull this chart up so I could show you like this sort of different ways that you're able to use the RSI to see what's really going on in the market. So like I can see that like this RSI isn't making like clear new highs like the price is, but it's not really going a lot lower. It's not diverging crazy. It's not showing some crazy weakness happening versus the rest of the market. So like I said, that's just telling me that we're probably going to reprice a little lower just to go a little higher rather than just flipping trend like we're seeing on the euro. So like I would say I would first honestly I love when price looks like that, it's real open like that. I love to grab me. Oh, oops, hit the wrong one. I love to grab me this here fib tool. Yeah, that makes sense. It means if we get a touch around the key level that stop price here and here and here, which would make sense. That's right up under price, and we could potentially see something like. Let me see. Oops. See something like price come down here, right? And then most people think that like it's the perfect opportunity to go ahead and buy, and then like they go ahead and buy it, but then reprice is just a little bit lower to get some of this liquidity here. I mean, like granted, I wouldn't say that there's too much left there, but I can't say for certain if there is or isn't. So I as it being a key level, I just like to have it in my mind. You know what I'm saying? Just be thinking about. So I can see price reasonably come down, consolidate in here, dip out lower, and then start giving us some momentum to the upside. So like consolidate here, fake out some people, say like, yeah, make people think like, yeah, let me buy it right now, and then go ahead and come out of it and then go higher. That's a lot of times price likes to grab as much liquidity as possible, especially assets like gold, before going higher. So that's what that will be doing. That will be a little liquidity grab. So with this, you should be able to understand a little bit more about how I use divergence in various ways to see and spot areas to trade out of. It's the first check that I go through in my checks and balances, like, okay, what is it what is the strength of this compared to the rest of the market? You know what I mean? Like that's my first go to, because it just gives me a good gauge at, okay, so if it's buying and it's strong, then we're in a super duper bullish market for this asset. I probably shouldn't be looking for sales, and vice versa. Or if I'm, you know what I'm saying, looking for trying to look for sales, I should be looking for something that's weak and probably has been doing some selling. You know what I mean? Or been doing buying, but it's been weak versus the rest of the market. You know what I'm saying? It gives me the bias to go off of to actually start, trading and looking at more factors to trade off of. All right. So if you got some value out of seeing a little bit into my strategy a little bit, then I encourage you, please hit that like button. It tells the algorithm that this is good content, so somebody else can take this and put it into their strategy, and you feel me, like make some money with it and whatnot. You know what I'm saying? I'm here to teach y'all. I'm here to grow the community. So I love y'all. Make sure you're kind today. Hit that like button, hit that sub button, and make sure you hit that bell icon so you get notified as soon as we drop videos. All right. Again, I love y'all. Make sure you're kind to somebody. I'm gonna catch y'all on the next one.